What this slip below the 21,800 mark is telling you, and when it comes to the mid and the small cap indexes, do you think that last week's pain or last week's shake-off was not the first time? We're going to see that kind of weakness come in again, perhaps?
So the one pattern which is very clear is that it's selling on low volumes. So the volumes which were there last week when that mid cap so-called capitulation day happened, and the volumes thereafter in the next 3 or 4 trading sessions, the volumes for those mid cap names is on thinner volumes. Even if it's a bounce, or even if few of the mid cap names which have gone through a further leg of correction for themselves, which generally indicates that maybe the major pain for most of the stocks which have corrected or were participating in that leg of correction, I think that seems to be out. But the pain is still left into those larger cap names, the heavy weighted sectors which were still underperforming. For example, the FMCG stocks were underperforming, and today you're seeing those classical signs where the volumes have come back again and these stocks have made a fresh swing low. Positively, the metal stocks which were doing pretty well yesterday, they have not retraced completely, so that generally indicates that the momentum is still there into these stocks largely, and maybe a couple of days of pause for these stocks, and post that we may be expecting a breakout. But I also believe that this 21,800 mark, 21,750 to be precise, is a very strong support, and I think if we manage to break below those levels, maybe the near-term trend for the Nifty could get a bit more dampened.
Okay, near-term trends seem to be more dampened if these levels are not maintained. Naresh, what's your thought coming in also in terms of the mid and small cap as well? That's not seen any sort of a relief or anything coming in on the positive side for this one, and clear pressure coming in and there. So, do you think this is going to be continuing? What are the charts for the mid and small cap?
So overall, if you look at it today, at least on the day when the Nifty is correcting 1% and the Bank Nifty is correcting 0.5%, you are not seeing a 1.5% cut on the small cap indices as well as on the mid cap indices. So that's a good start in the correction. We are normalizing. We are not seeing a sharp fall in the mid cap and small cap indices. So overall, this indicates we are getting into a consolidation mode for the whole market as such. Until now, just a few weeks back, it was all about small caps outperforming. For the last few sessions, it was large caps outperforming, but now we are getting into a band. So now 21,600 is the next price point to watch out for the Nifty. The small cap index, till the time it holds above the recent lows also, we could see this consolidation continue. So we are in the period of time where one has to be careful because a lot of stocks will not see follow-up the next day. We've seen that happen quite a few times over the last 2-3 sessions. So overall, getting into a consolidation mode for small caps as well as for large caps.
While the market...
If you like this video, then like, share and subscribe to ET Now.